All right, now in this video, this is for the newbies that's getting started within our futures trading group. And we're going to show you how to connect. This video is for the ones that actually have the prop firm funded account with Take Profit Trader, or if you're using Tradovate, depending on whether you're using Apex or Take Profit Trader, you will have to first connect your Tradovate account to TradingView if you're trying to trade directly on TradingView. So what I'm going to do is I'm going to pull up Tradovate. Pull this over to the screen. You guys will log in using the login information that you got in your email, whether you're using Take Profit Trader or Apex. Those are the main two that we're using right now. You will utilize your username and the password that they gave you. You're going to log in. When you log in to Tradovate, you're going to go to Simulation. Once it pulls up, you're going to have to go into the menu tab all the way here at the upper right hand corner, this little mixer box that you see right here. You're going to click on this and you're going to go to add-ons. When you go to add-ons, you will see TradingView. If you're using a prop firm, whether it's Apex or Take Profit Trader, yours should say free, and then you just click on activate. Here you're going to click on activate and it should be activated. Once it's activated, you will then go to TradingView. On the chart on TradingView at the bottom, you're going to see Forex Screener, Pine Editor, Strategy Tester, and you're going to see Trading Panel. You click on Trading Panel, and when you get into the Trading Panel, you're going to see a number of brokers. Mine is already logged in, so I'm not going to do it in this video. But you're going to find Tradovate, hover over Tradovate, and click Connect. When you click on Connect, you're going to log into the Tradovate account using the same username and password that you did to log into Tradovate. You're going to log into it directly on TradingView. Once you do that, you will be connected. Your Tradovate will be connected to TradingView. Therefore, you can take the trades directly on TradingView, perspective to your actual account with Tradovate. Tradovate is the broker. The prop firm is either going to be Apex or Take Profit Trader. TradingView is where you actually chart up mark up your charts. TradingView is where we have all of our tools inserted, and you can actually take the trade directly on TradingView. It's similar to Forex. If you were on Forex, you may have had a broker like AAFX, but you're trading on MT4. You have to connect your broker to the MT4. That way, when you're trading on MT4, it is actually trading on your actual account within that broker. So same thing with futures. We're using the prop firms. So we're using either Apex or Take Profit Trader to get the funded account. Once you're getting the funded account, you can either use Tradovate as your broker. And if you're using Tradovate, you can either trade directly on Tradovate, or you can trade directly on TradingView. So being that the tools are on TradingView, we recommend that if you are unfamiliar with Tradovate, then simply just utilize the tools. If I see the sell on TradingView, if I want to take a sell, this is our order window right here. And in order to get this order window up, go back down to where you see Tradovate at the very bottom. Next to it is going to say trade. You press trade, and then your trading window is going to appear. Now, for the ones that are unfamiliar with futures, the future symbol of, let's go to gold. The future symbol of gold is GC. Notice it says gold futures, GC1. Now, if you were trading regular Forex, gold will be XAU USD. The chart looks the same. The chart is going to look exactly the same. Only thing is, instead of trading lot sizes in the Forex market, if you're trading the futures contract, which is gold futures, you're going to be trading units or contracts instead of lot sizes. So I'm going to screenshot this and I'm going to send it in the group. I'm also going to add it to the PDF so you guys will be able to tell the difference, or at least know if you see a signal in the signal channel and you see one of these pairs like GC1 or buy ESU, you'll know exactly what to look for. You'll know how to pull it up, and you'll know what it is. So RTY is Russell 2000. GC1 is gold, ESU is S&P 500, NQU is NASDAQ 100, YMU is US 30, NKD is the Nikkei 225, NG1 is natural gas, and then from there you have these are all your minors or your minis. Your minis is the standard contract. If you want to take less of a risk of a trade, so say for instance, if I wanted to trade gold and it's the regular GC1, this is the mini, your tick value is $10 per tick. If you don't want to risk the full $10 per tick on gold, but you still want to trade gold, instead of trading the mini, you're going to trade the micro. Notice you have GC, ES, NQ, YM. Down here, you have MES, micro, NQ, micro, YM, micro, GC, and then micro 2KU. So these with the M in front of it are all of the micros. The ones at the top without the N in front of it are the minis. So the mini gold tick value is 10, right? So say for instance, if I wanted to take a trade on gold, if I was to take this trade, I'm risking $10 per tick. If I don't want to risk that much, if I want to lower my risk, especially for the newbies, we highly suggest you guys use the micros down here. So instead of using gold GC1, I would go to micro GC1. And instead of trading at $10 a tick, it is now $1 a tick. It's basically your micros is 1/10 of the mini, or the mini is 10 times the amount of weight of the micro. So instead of trading the mini, we highly suggest trading the micros at first until you get used to the tools, you get used to trading futures, you get used to the sessions. And if you want to graduate and start trading the higher riskier symbols, which is the mini instead of the micro, you can always do that. But the mini or the micro, the chart is the same. The candles are the same. The patterns, notice this pattern right here on micro, you got a nice little flag into the zone. This is the micro. If I go back to the mini, it is the exact same move. Out the zone, flag into the zone. So trading the futures, we want to make sure that we're on the right side of the trade. I don't want to make this video too long. I just wanted to have this video to kind of get you guys connected from Tradovate, connecting your Tradovate to your Tradingview, and then how to actually take a trade. So if you're pulling up a trade, you click on trade so you can see your trading window. Now you notice you have order at the top, you have DOM. Your DOM is basically showing you, well, it's going to show you where the orders are at. Got a few buyers here, a few sellers up here. That's the DOM. We're going to get to that later. We don't want to over saturate you guys with information. So you don't focus on the DOM just yet. You're going to make your orders on the order screen. You can either sell, you can buy, right? If you sell, you can do market execution. You can do sell limits, sell stops, stop limits. For right now, we're going to focus on market execution. So if I was to put a sell, market execution, how many units or contracts do you want to risk? So if you're doing just one contract on the mini, it's $10. If I'm doing one contract on the micro, it's $1. So instead of risking the full $10, if I just wanted to risk $3, I would go down to the micro and turn the units to 3 because it's $1 per contract. Now that we have 3 units, which is 3 contracts, we're now risking $3 per tick instead of the full $10 per tick if we was trading the minis. So once you have your units, you have, if you want to sell or buy, click on take profit, click on stop loss, and simply press sell. When you press sell, I don't want to do that now because the market is closed. I want to wait until at least 6. But when you press sell, you're going to see your entry. You're going to see your stop loss. If I'm selling, that means my stop loss will be up here. My take profit will be some down here, right? And then you can adjust. You can pull. If you want your take profit to be down here, you can pull your take profit down. If you want your stop loss to be closer, you can move your stop loss. That should be, for the traders out there that understand trading, that should be simple, right? So that's basically it. As far as at least getting you connected, as far as at least getting you to understand where to pull up the trade window and your actual futures pair. So I'm going to screenshot this. I'm going to add this in the group. Now, if you see a signal for RTY, Lord have mercy, that was a beautiful sound. If you see a signal for RTY and you're brand new, RTY is $5 a tick. If you do not want to risk $5 a tick, like we said, instead of trading the mini, you're going to trade the micro. The micro for Russell is M2K. It's M2K. And notice that for Russell, the micro is 50 cents instead of $5. So if you see a signal for RTY and you want to take that trade, but you don't want to take the full $5, you will go down to the mini because it's the same move, same chart. It's just a lower risk, right? Same thing for gold. If you see it, because the signals are coming for the minis. You're not going to see the signal for MES or the signal for MNQ or anything like that. That's going to oversaturate the actual channel itself. So what we did was we focused the signals on the minis, but if you wanted to trade the micro, you're going to see, if you see the signal for Russell 2000 or gold or ES or NASDAQ or US 30, if you see the signal and you want to take it, but you want to lower the risk, all you have to do is pull up that prospective asset as a micro, and you can take the exact same trade. So hopefully this video cleared up a little bit of the dead space, especially I know some of you guys may be brand new crossing over to the future side. So I don't want you guys to get frustrated, just like it was when people first started Forex. It was a small learning curve. If you already know how to trade, trust me, the learning curve is not going to be that long. Might take you a day or two to get used to the symbols and the lower time frames and how to take the trade on Tradingview instead of MT4. That once you get that out of the way, then all we got to do is focus on necessarily understanding the zones and when it's time for you to take the trade, whether it's going to be during Asian, whether it's during London, whether it's during New York. I'm also showing people how to find a trade. Don't matter what time of day it is, whether it's in the morning, afternoon, at night. If it's 9:45, I can show you how to find the right zone. So at 10 o'clock p.m. or a.m., you'll have a prospective zone. You can take the trade. So hopefully this video cleared up some air, helped you guys get started. If you need to ask any questions at all, feel free to reach out to me or in the chat. That way we can keep you updated and get you caught up to speed so that you can have a successful journey in your future. I'll see you guys in the group or in the next video.